Well, hello again, dear viewers. We have a very important discussion here today. We're going to talk about banking, the problem that you face, and you may not be aware of it. Most people probably are not aware of the inherent risks that are involved in dealing with banks. Now, the fact that you follow this channel, there's a good chance you are aware. But we're going to zero in on specifically what we need to avoid in terms of the traps and the pitfalls and the risks that are lurking out there, waiting to ensnare us. And of course, it would do no good to talk about the problem if we didn't have a solution, right? So we've got a very unique solution that you simply won't find anywhere else. And the whole point is to help us avoid these risks, avoid these traps, and escape the clutches of the banksters and the long line of predatory professional thieves that line up behind them to feed off of their prey. Okay? So let's get right into it. So here you are. You have your money. You are the owner of that money. You've earned it. It's yours. Let's just say for conversational purposes, this is after-tax money, and you can do whatever you like with it. All right? Now, typically, folks have been brought up to feed the system, and what do we do with our money? We put it in the local bank. All right? So now, the bank has your money, and it's not your money anymore. It's the bank's money. And that's the legal position of the bank. You have just gone from the owner of your money now to an unsecured creditor of that money which is now in the bank and is now the bank's money. So what does it mean to be an unsecured creditor? It means if the bank goes insolvent and goes bankrupt, that you will stand in line with all of the contractors that the bank owes money to. And what do I mean by contractors? Well, there's the building maintenance people, there's the people who mow the lawns, wash the windows, clean the bank, there's the advertising agencies, there's the perhaps outside temp employee agencies, all the service providers who provide services to the bank. They don't have deposits in the bank, but they're owed money, perhaps by contract. They're contractors, okay? You stand in line with the contractors as an unsecured creditor. So how does that make you feel? This is by law, recent law in the last couple of years, okay? So that's important to understand how that works. All right, now if the bank goes insolvent, makes some bad bets, loses money, doesn't have enough liquidity to take care of depositors, again, the new laws tell us that there will be no more government bailouts. The taxpayers will not be bailing out the banks anymore. Well, that's a good thing. Thank goodness for that so far. So what are they doing instead? They're going to be doing bank bail-ins. And if you're not familiar with that term, I presume you are, but for those who aren't, a bank bail-in is not where the taxpayers make the bank solvent again, but you will pay the bank's gambling debts, the bad debts that they've made. You will pay for the bad decisions. You will pay for the reckless management. You will pay for the systemic risk on a fraudulent fiat currency system that simply cannot sustain itself. By design, you will pay these debts in the next bail-in. All right? So, how does that work? Well, the bank figures out how many depositors it has. It figures out how much they need to recover, quote unquote, from depositors' accounts, and then they'll determine if what kind of a haircut that they will give to the depositors. Would that be 15%? They would just take 15% of all the depositors' money, take it for themselves to bail themselves out of their bad gambling debts, and leave you with a mere 85% of your previous balance. Nice, huh? Or could that be 20%? You don't know. Could be 25%. It all depends on the size of the gambling debts that you're going to have to share the payment of with all the other depositors. Okay? Well, let's look at some real history here to see what that haircut could be. Here's an article out of the Financial Times. Quote, Greek banks are preparing contingency plans for a possible bail-in of depositors amid fears the country is headed for financial collapse. Does that sound familiar? Bankers and business people with knowledge of the measures said this on Friday. All right, the plans, which call for a haircut, and we're not talking about the beauty salon, a new style, right? We're talking about a financial haircut of at least 30% on deposits above 8,000 euro. Sketch out an increasingly likely scenario for at least one bank, the sources said. 30% on deposits. This is history. This actually happened. Look up the history of Greece, Greek banks. And we're not limited to Greek banks, okay? That's just one example. The U.S. banking system is increasingly exposed to toxic risk. All right, there's a high number of problem banks. Those banks hold a high dollar figure in assets. This creates a potential systemic risk, limited not only to those problem banks, but when those problem banks go down, it's a contagion that spreads like a virus. All right, this article showed a chart with some very ominous data from the FDIC. You also should look up, do some research on Deutsche Bank and the mountain of derivatives that it is sitting on. Derivatives are a fancy banking term, otherwise known as gambling debts. Derivatives really have little to no underlying or intrinsic value in the instruments that are being traded. They're bets. These guys are putting puts and calls as you would in options. They're betting that certain markets will go up or down. It's just pure betting. If you haven't seen it, you need to look at, you need to go find the movie, The Big Short. You really need to watch that movie. Make a note of it now, The Big Short. Watch that movie. It'll give you some pretty good insights as to what we're talking about here. All right? So, assuming you're well aware of all this, I'm going to kind of breeze through this quickly. So now the bank is the owner of your money. You're an unsecured creditor, and you want to make a transfer request. All right? Let's say you've got some contact in Canada, and you're in New Zealand. You want to make a transfer money to a new business partner. All right? And here's what happens. First of all, the bank is going to be looking for suspicious activity. What could suspicious activity be? In these days, they use this not so much as a reason or a method or a means to screen out fraudulent activity, but it's being used maliciously now, more so as a means to control the money supply, the money transfers, and to maintain money on their books and use it as an excuse for nefarious activity. All right? But what could that be? That's anything unusual stepping outside the normal profile of activity that your account has shown. So you've got a profile. You've got an average monthly deposit. You've got average amount of deposits per deposit. you've got an average expenditure. They know who your typical business or trading partners are. They know who you do business with. That builds your profile. Now, if you want to do a transaction that is different from that profile, that's unusual. That could be looked at as a suspicious activity. Okay? A one-time transaction that's larger than normal. Outgoing or incoming. Doesn't matter. All right? This is perceived as being potentially a high-risk transaction. The red flags come up, the bells go off, and now someone's taking a look at it. All right? This could be cause to close the account. I've had more than one account closed because something was perceived as high risk. Or perhaps it wasn't labeled high risk, but the bank felt that it could be. It wasn't determined, but it could be high risk. They just didn't know that much about it, and because this was outside their realm of understanding, they closed the account. This happens, okay? Be ready. Be ready. So, all right. Then the questions start coming. Well, why are you making this transfer? What's the purpose? What's this for? All right, so you tell them, investment. I'm investing. That's all you need to tell them, one word. It's an investment. Okay, then they say, well, show us the invoice. Well, not everybody does business with invoices. These days with the internet, there's a lot of ways to do business without invoices. But if you have one, all right, here, show us the invoice. Show us that this is a real transaction and who it's coming from. So you give that, and then they say, oh, okay, well, show us the contract supporting the invoice. Maybe you have one, maybe you don't. If you don't, then what? If you do, okay, here's the contract. Well, so, yeah, we see the contract. Who are these people? They want to know who these people are. For crying out loud. I have to really work hard not to get vulgar in my language at this point. But so then okay, well, what's their website? And I've had banks ask this question when the website was listed right on the frickin' invoice. It's like, come on, people, do your job, be a professional, take care of business here, quit harassing me. I feel like a babysitter, grilling me, because I want to stay up late and watch a movie. It's ridiculous. All right, so now, is this approved activity? So now they'll match all this information against their list of approved activities. There's a whole long list of businesses that are considered high risk that they don't want you sending your money to. Credit repair, online gambling, dating sites, merchant accounts, financial services, Forex, brokerage exchanges. There's a long list of high-risk businesses that banks really don't want you doing business with. All right, so now it's, okay, you provided all these things. Well, we'll submit it to compliance for review. Well, what do you mean review? We just reviewed it. You just grilled me for the past week asking me for all these documents. What do you mean now you're going to review it? I'm talking from personal experience, folks. International banks. Okay? So I know about these things. So okay, finally, it's approved. Oh my gosh. You're gonna approve me to send my own money. And I correct myself because I know now it's not my money, it's the bank's money. All right? So now they've approved it, they've approved the request, and they put a value date on it 1 to 2 weeks out. Meaning the recipient won't be able to collect it for 1 to 2 weeks. And they typically do this with larger amounts. Now this is ridiculous because I know for a fact even international wire transfers can be sent and received the same day, if not within the hour. I've had that experience. I've got banks that do that. So what you're saying, Mr. Banker, that if the recipient has to wait 2 weeks to get my money, what you're saying is you're going to debit my account. Let's just say the number is $100,000. You're going to debit my account for $100,000. I won't have that to use. I won't be earning interest on it. But you will be earning interest, the overnight interest, every day, overnight, for 2 weeks. You'll be using my money before you send it out. That's what you're saying, Mr. Banker. And no, I don't approve of that. That's ridiculous. Give me my money. I'm closing my account. I'm getting away from you sons of bitches, and I'm going to do something different. Got it? Oh, my request wasn't approved. Oh, we think that what you're doing is too risky. There's too many questions that we have involved, and we want to protect you, so we're not going to let you make this transfer. We've seen that happen with clients. This is the way it is, folks. This is the way it is. All right? You don't own your money in the bank owns your money, and they do what they want with it. You got that? I hope I'm getting through to you so that you don't have to go through some of the things that I've had to go through with these SOBs. All right? Now, just to put yourself in a position so that you can have a babysitter either approving or denying your requests to do what you want with that money, which is no longer your money, you've got to submit complete know your customer information. They want to know who you are. They want you to prove where you live physically. They want to know where your money comes from. Where do you work? Who you do business with? Who can give you references? Who are your closest personal contacts? Family, friends, business associates. They want to know your financial history. All right? And only then, once you've laid yourself naked onto the butcher block, only then will they consider allowing you to give them your money. Sounds like pretty much a one-sided deal, doesn't it? When you sign that account agreement, it's full of false confessions and admissions. And by that I'm talking about the fact that you, as a natural man or woman upon the land, living under divine universal law, must confess that you are now a corporate person, dead entity, which, regardless of what jurisdiction you're coming out of, you must enter into their jurisdiction, which is for the corporate statutory guidelines, bylaws, and the statutory code. You must now admit to being a subject slave to the corporate state. Why? Because you've got federal insurance on that account. That's a benefit. And only citizen slaves can get that benefit. All right? So once your account is opened, it's fully monitored. They're keeping their eyes on it, all activity, all the comings and the goings, you know, what's going on with your life. And this is a permanent record of your life. Again, who you do business with, where your money comes from, what you do with it, where does it go, what kind of a lifestyle are you leading? Okay? All of this becomes a permanent record of your life, which really is nobody's business. But yet, the bureau rats have unfettered access to that permanent record of your life. The tax collectors, the regulators, the revenuers, the judicial system. Anybody who wants in that system, that corporate system that you've just entered into by agreement, voluntarily, by signing that account statement, can get access to your life. those funds, not your funds anymore, but those funds can be subject to seizure and garnishment without due process, which is routine. These so-called officials walk into the bank, they flash a badge or a nicely written letter on official stationery. No court judgments, no court decrees, no real statutory due process, even by their rules. And these bankers will roll over without blinking an eye. Oh, here comes the IRS guy. Okay, what do you want today, Joe? Oh yeah, give me the records on these 10 accounts. Okay, sure. Have a seat. We'll have it to you in 5 minutes. Oh, give us a list. Oh, there it is. All right, we'll print it out for you. No problem. That's pretty much how it goes. No checking of documentation, due process, court orders. They just roll over. So plan for that. Your life. All right? So you contract for government benefits, as I mentioned, federal insurance, all the regulations that the bank is subject to. Why? Oh, of course, it's to protect you. We all know these regulations are there to protect you. So those are benefits from the government that you're receiving, and in order to get those benefits, you have to subject yourself to that corporate government bylaw regulations. All right? Is that pretty clear? Good. So why the hell would anybody subject themselves to this? That's the question. Why? Why? There are ways to manage banks for business and personal needs with minimal exposure, minimal risk. That's what we do. Just takes some knowledge, some planning, some strategizing. So prudent savers, investors, retirement planners, and wealth managers all should absolutely require alternatives to traditional banking in their financial plan. It's absolutely mandatory, and now you know why. So let's talk about the solution to all this. The solution is provided to you by Monaco Management Group, the international financial consultancy that operates on a global level with advanced financial techniques, dealing primarily in financial privacy and asset protection, streamlined financial solutions, and these are often delivered only through professional advisors, one of which is the Lighthouse Law Club. Okay? Monaco Management Group picks up where the status quo leaves off. So if you're dealing with professionals in your business, lawyers, accountants, advisors, take what they say, use it to your best benefit. That's a partial solution, a temporary solution that gets you so far. And when you want to take it to the next level, that's where the Monaco Management Group can step in and start really getting some production and some results in your life. You can find the entire website at mmg.world. Okay? So we're going to be discussing better alternatives to the status quo. Stepping it up a notch, stepping outside of the box, expanding our thinking so that you can now have access to wealth management like you've never seen it before. Now, in this graphic shows cryptocurrencies, but we're not talking about cryptocurrencies. Cryptocurrencies are one alternative of many to the status quo. This simply represents an alternative. Okay? So let's show you where we're at. So here you are again, back in the status where you have your money and the bank doesn't have it yet. I like that status. All right? The bank is keeping their eyes on you because they're just waiting for that money to come in. They want to put their magnet out there and suck those dollars or euros or kiwi right into their clutches. And of course, we know that behind the banks is the entire judicial system, the entire corporate entrapment system, and all of their minions. All right, so what we're going to do, we're going to find a way to get around the bank. And you could even go through the bank. That would be fine. Use the bank as a pass-through, but not as a repository. Okay? So it's either a pass-through or you just avoid it altogether. And there are ways of doing that. So now, you take your money as the owner of those funds, and now you deposit that into a private, offshore, alternative asset account. This could be, for example, a private, insured, bonded vault operating outside of the banking system, where there's no reporting, no seizures, no garnishments, no taxes. Taxes are your business. The vault has nothing to do with taxes. They're not interested in your taxes. You take care of your own business. All they're interested in is protecting the assets that you've deposited into that vault. That's their only purpose and their only objective. All right? Now, let's just say, hypothetically speaking, of course, that you have made prior arrangements to set up a trust in the international arena. There's an international offshore trustee. That trustee also has an account in the private vault, which is an independent third party, well established, well recognized, well protected, and very private. All right? So both you and the trustee of this business trust, this private business trust, have accounts in the vault. All right? Let's just say hypothetically, the bank and the judicial system and their minions get a whiff of the trail of where that money went to. And they want to start digging. First of all, they're going to have to gain jurisdiction in an international venue. That's number one. Number two, if you have, for example, some type of obligation, and I'm sure you can imagine perhaps what those might hypothetically be, and the system wants to get their hands on that, so long as that money is yours, wherever it is, especially if you're a U.S. citizen, wherever that money is, that's considered yours. The court could order you to repatriate that money, and if you didn't do it, you'd be in violation of the court order. However, if through prior arrangements you have transferred some of that value in the vault to the trustee to be held in the trust for the purposes that the trust was created for, which were your purposes, your family financial planning, your heritage, your estate, once those funds or that value is transferred to the trustee, those funds are no longer your funds. So if you were under court order, you could show the balance in your private offshore account, which would be little to nothing perhaps, or whatever amount you were willing to keep there. Okay? But that's all. Whatever was passed to the trustee would be completely out of their reach. Why? Because it's no longer your funds. It's owned by the trust. So that's number one, the fact that it's offshore. Number two. Number three, the jurisdiction where those funds may be held could be any one of a dozen jurisdictions around the world, depending on how the trustee is to manage those assets. Okay? So, over time, you've made some transfers, the private trust has built up some capital, and now it's time to start investing that, building a portfolio, making those assets grow, and you've now got a diversified tax-free portfolio. Those funds are growing in a tax-free environment. Again, they're not your funds. They're owned by the trust. And the trust now can invest in cryptocurrencies, new technology, gold, silver, Bitcoin mining, real metals mining, real estate, business, trading accounts, you name it. All right? Now, if you were to do a future value calculation, you can find future value calculators if you don't have one. You can find them right on the internet. But do some calculations that, just for example, if you take $50,000 or $100,000 present value, let's just say it's growing at 10% a year over 20 years. Break that down into a monthly compounding basis. Do that with, let's say, $100,000 initial capital without tax, and then calculate what that would be if you had to deduct 30% tax every year. The difference is astounding. So growing tax-free may mean the difference between, providing a legacy for your family or not. It's a huge difference. All right. So these investments in the trust portfolio are now throwing off cash profits. Again, not your profits, not taxable to you because it's the trust. And that money goes back now into the trust. Now, it's possible that the trustee might appoint you as the manager of that trust, or in some capacity, some official capacity, to be a functionary of the trust. You don't own the trust, you don't own the corpus or the assets, but essentially you work for and at the pleasure of the trustee. The trustee is the one in control, in charge. You're treated like an employee. And as such, the trustee might have some functions for you to perform. And as a function of those duties and obligations, there will be some expenses involved. And you would need to have access to some capital to take care of those business expenses relative to the trust. So the trustee could then move some value back into the vault. The vault has issued you a debit card, and from that debit card, you could then access liquidity for the business needs of the trust. Maybe the trust needs to send you on a professional training cruise, or to develop, for example, there's a cruise coming up in the blockchain industry. Maybe you need to investigate some investment opportunities, and the trustee wants to send you on that cruise. There's a blockchain cruise leaving Barcelona this June. They're going to stop in Marseille, Mallorca, Sicily, and end up in Rome. And in the process, you'd have the chance to meet 4,000 people in the blockchain industry. That might be something the trustee wants you to do. Or it could be anything. It could be going to the south of France to investigate real estate opportunities with villas there. It might mean going to Fort Lauderdale, to some marinas, to do some searching for appropriate yachts that the trust might want to purchase for lease as a business opportunity. Now, for larger business arrangements, larger transfers of capital, that trust might decide to invest in real estate or vehicles and lease those properties out. So I hope you follow me here. All right? But that's all trust activity. And as manager, naturally, you might need to have access to some cash to handle that business appropriately on behalf of the trust. So you see what's going on here, okay? And in the meantime, now, whatever you pull out from the debit card is never going to be an amount equal to or greater than the funds that have gone into the vault and then the trustee and then the trust. All right? So you're never going to have a capital gains issue because there's no need for those funds to come back. Those funds are all held internally and used for internal purposes within the trust and converted to a business purpose. You follow where I'm going with this, I trust. Okay? So it's a very simple concept. There's nothing complicated about this at all. It's simply a matter of not using the banks as a repository for larger amounts of funds. Perhaps it's necessary, as a pass-through for monthly bills and expenses, but yet you'd be much better off just to get your name off of all these bank agreements and find other ways of doing that. And those are the things that we get into in the things that we teach. Okay? But this is the concept. And naturally, it raises a lot of questions. I'm sure you've got a lot of questions from just watching this. And for that reason, we've developed a series of videos. Actually, there's 9 different videos in this series, which you can find at privatebusiness.biz. Here, we really drill down into some of the details that if this concept appeals to you, you're going to want to do your due diligence on it. You're going to want to understand it better. What are the details? How does it work? What about this? What about that? If I have this situation or that situation, how is it handled? Okay, these 9 videos at privatebusiness.biz, make a note of that if you can. And these videos are available. You can live stream these videos on a rental basis for up to 1 month. So if you want to access these videos, we put up a small fee as a barrier, $79. We'll give you access to all these videos. You can watch them as often as you like within a 30-day period. But they're not available to download because it's proprietary information. And we trust that you will treat it accordingly and respect that. Okay? But 4 hours and 13 minutes between 9 different videos, and you're going to learn a lot. You're going to learn a heck of a lot. And there's no doubt that the light bulb will go on, probably on each and every one of these videos, which we'll be revealing. It'll probably be reviewing, some information you're already well aware of, because really all of this is based on fundamentals. We're not recreating the wheel here. We're talking about fundamentals that have been used in wealth management for generations. But they simply aren't talked about anymore because it's not good for business for the Bar Association. Because if you do the things that we're talking about here, you won't need attorneys. 9 times out of 10. You don't need them anymore. You can manage your own affairs. And why is that mainly? Because when you have a solid asset protection system protecting your privacy, nobody, and I mean nobody, is going to get enough access to the information or the assets to cause any problem for you. Uninformed individuals often try to challenge me and say, well, show me some court cases where this has been successful. I'm sorry, but you dumb shit, success is in never having a court situation. All right? That's what success is, when you never have to go to court. Show me someone who's been to court, and I'll show you someone who really isn't set up properly. It's pretty simple. So, that's available at privatebusiness.biz, and I highly recommend that you take advantage of it. Increase your knowledge. Whether you're ready to do something or not in this arena, this will add to your knowledge base substantially. All right? Now, this is all. Once you've gone through this and you've decided, yeah, this is something that I need to do, here's the route we take. We go to the Global Entrepreneur Membership, which is offered by the Lighthouse Law Club. All right? So the Lighthouse Law Club is you could look at it as the distributor for this product and this information. That's done primarily because the Lighthouse Law Club provides the tools and the systems to deliver educational information, which you'll have access to 24/7 anytime you like, and you'll be able to refer back to it whenever you like. All right, so this is an educational process. It's a new type of lifestyle. It's a new way of doing business. And really, it's the only way of doing business if you're looking to preserve what you've worked hard for all your life, or let's say you're young and just starting out. What better way to retire early than to start building wealth now, tax-free, totally private, and out of the clutches of the banksters? That's where we're at. I hope you can benefit from this information. Take it to the next step. Go to privatebusiness.biz, expand your knowledge and education, and when you're ready, become a global entrepreneur with the Lighthouse Law Club. That's all for today, folks. Thank you for your attention, and we hope to be seeing you and talking with you before long. Take care. God bless.